October 24th, Black Thursday. The market opened with a burst of selling. Then a downward trend in stock prices scared investors into quickly selling more of their stock to limit their losses. Before the day was out, almost 13 million shares had been traded. And then came Black Tuesday, October 29th. From the opening bell, it was obvious something was wrong. There was an immediate explosion of selling. Investors seemed determined to get rid of vast amounts of stock before it dropped any more in value. Brokers began calling their clients to pay their margin, but it wasn't possible. Investors had banked on their profits to pay their loans, and their profits were disappearing in front of their eyes. Soon full panic set in. So many traders trying to dump so much stock so fast caused prices to plummet. Investors unable to reach their brokers swarmed to the stock exchange. Police were called to control the crowd. When the smoke cleared, share prices had recovered only slightly. But the amount of trading that day was astounding. More than 16 million shares. In the days that followed, their value kept dropping dramatically. Over the next 2 years, they would drop to rock bottom, and $50 billion would simply vanish. Thousands of investors were ruined, and public confidence in the American economy was shattered. Banks were hit very hard. They too had invested in the market, and as their investments dwindled, they began calling in their loans and mortgages. But their clients were in the same boat. They were broke too. This led to many banks being wiped out. Some banks did manage to keep going. But people soon decided that their money wasn't very safe in any bank. And they began withdrawing it in record numbers. Many banks soon ran out of cash to cover their investors' deposits, and they too had to shut their doors. In the U.S. alone, almost 10,000 banks were forced to close. With the crash, businesses and factories couldn't pretend anymore that markets would pick up, so they stopped producing and laid off their workers. In a healthy economy, it's important for everyone to keep spending, paying wages, buying products, investing in banks, lending to business. But with so many having lost their jobs, spending declined. Products wouldn't sell. Then deflation set in. This means that prices started to drop. This had the result of decreasing spending even further. After all, if you knew prices would be lower tomorrow, why would you spend your money today? This marked the beginning of a time of great suffering and agitation all across America. Men chose to sell apples on the street or shine shoes rather than ask for charity. If a job did become available, the unemployed lined up by the thousands, hoping for the best. Soup kitchens and bread lines became the main source of food for the jobless. Demonstrations by thousands of unemployed, known as hunger marches, appeared in many major cities. A hunger march in Detroit, where thousands of jobless demanded work at the gates of the Ford auto plant, got out of hand. Police opened fire, and 5 marchers were killed. In Chicago, the wooden cobblestones were dug out of the streets to use for firewood. Most Americans were still working. In fact, many remember the Depression years as a gentle, uncomplicated time. But for those without work, it was brutal. At its worst, 25% of the workforce would be unemployed, and as many as 250,000 Americans would be homeless.